Hello everyone, welcome to the Financial Information Channel. My name is Marvin. In this video I'm going to give you the stock market news and I'm going to do a recap on what happened today. This is going to be a voiceover video. Now let's begin with the video. So the S&P 500 and the Nasdaq closed lower because there was a reverse on the technology. The Dow went up 0.39%, the S&P 500 went up 0.10%, and the Nasdaq went up 0.63%. The biggest gainer in the S&P was automated data is 9.1%. The biggest decliner in the S&P was CA in corporations with 10.2%. The Nasdaq biggest gainer was ADP again with 9.1%. SIRI was second at 8.2%. The top decliner was CA with 10.2%. The Dow biggest gainer was Verizon with 7.7%. That is actually great. And the biggest decliner in the Dow is Apple with 1.9%. Now for earnings, Amazon EPS of 40 cents and Amazon beat the revenue by 820 millions. The revenue it was up 25% year to year. AWS sales grew 42%. AWS is Amazon Web Services. Our operating income fell from last year 6.8 millions versus 1.09 billions. And the cash flow actually went up to 37%, which is actually great. The next company is Aflac. They beat the EPS by 15 cents and they missed the revenue by 20 millions. And the revenue year to year is negative 0.2%. And the next company is Automatic Data Processing. They missed the EPS by 1 cent and the revenue was up 60 millions. Their revenue year to year is 6.9%. And the next company is Baidu. They beat the EPS by 16 cents and they were in line with the revenue. The revenue year to year is 14%. And Baidu is actually teaming up with PayPal to make a platform accepted globally. The next company is Celgene. They beat the EPS by 4 cents and the revenue by 40 millions. And the revenue year to year is 18.9%. And the next company is the Dow Chemicals. They beat the EPS by 8 cents and the revenue by 190 millions. The year to year revenue growth is 15.5%. The next company is Dunkin Brands. They beat the EPS by 2 cents and the company missed the revenue by 2.37 millions. The revenue growth year to year is 1%. And they said the comparable sales increased 0.8%. However, it fell 0.9% at Baskin-Robbins outlets. The next company is Electronic Arts. They reported an EPS of $2.06 and the revenue is 1.45 billion. The revenue year to year growth is 14.2%. And Electronic Arts actually were going down during the day. They actually had a good revenue growth. The total net revenue was up 14%. The digital net revenue was up 27.6%. And the next company is Expedia. They made the EPS by 0.04 cents and they beat the revenue by 50 millions. The revenue growth year to year is 17.7%. And the next company is Intel. They beat the EPS by 0.04 cents and they beat the revenue by 350 millions. The revenue year to year growth is 9.1%. So Intel total net revenue was up 9.1%, which is actually really good. The client computer was up 3% and the data center was 3.3%. And the next company is Mastercard. They beat the EPS by 0.06 cents and the revenue by 80 millions. The revenue year to year growth is 13.4%. And Mastercard reported a 17% increase in transactions and the purchase volume was up 9%. So we had Visa reported last week. They had an excellent quarter and Master had another excellent quarter. The next company is Mattel. They missed the EPS by 0.05 cents and the revenue was missed by 5.16 millions and the revenue year to year growth is 1.8%. The next company is MGM. They missed the EPS by 0.03 cents and the revenue they missed by 30 millions. The revenue year to year growth is 16.3% and MGM was moving down after they reported lower than expected China results. The next company is Proctor and Gamble. They beat the EPS by 0.07 cents and they beat the revenue by 60 millions. The revenue year to year growth is negative 0.1%. So Procter & Gamble said that the organic sales increased 2% and the volume was also up 2%. The next company, Sirius XM, They beat the EPS by 0.04 cents and revenue by 30 millions. The year-to-year growth in revenue is 8.9%. So the net income was up 16% to 202 millions on record revenues, and the operating cash flow was up 12%, and also the free cash flow grew 6%. The next company is Southwest Airlines. They beat the EPS by 0.04 cents and the revenue by 20 millions. The revenue year to year is 6.7%. So Southwest beat the revenue on a gain of around 1.5% in revenue. The next company was Starbucks. They were in line with the EPS and they missed revenue by 90 millions. The year-to-year growth in revenue is 8%. The global comparable stores grew 4% during the quarter, but the analysts were expecting 4.8%. And to break it down, the US breakdown, the average ticket was up 4%, in transactions was 1%, and the mobile orders and pay accounted for 9% of the sales. And the next company is Twitter. They actually beat the EPS by 0.03 cents and revenue by 37.38 millions. And the year-to-year growth in revenue is negative 4.6%. So I was looking at Twitter because basically the stock actually came down quite a bit. The ad revenue was down 8% year to year, and the monthly active users, which is MAU, was up 5%. But the estimates, and it is around 320 millions, but most analysts estimated around 332 millions. So actually the monthly active users were a little bit down, basically based on the analyst's opinion, and the CEO, which is Jack Dorsey, didn't have an idea why the monthly active users went down. However, there's a theory by analysts saying that the president, which is Donald Trump, is having an effect on the company with the over-the-top behavior. And the next company is UPS. They beat the EPS by 11 cents and revenue by 280 millions, and the revenue year-to-year growth is 7.7%. So they actually had a good quarter. It's not as good as FedEx, but it's still a good quarter. Now the next company is Verizon. Verizon were in line with the EPS, and they beat the revenue by 590 millions, and the year-to-year growth in revenue is negative 0.1%. So Verizon actually had a good quarter. The company said that it added 614,000 postpaid subscribers, and the adjusted profit grew 0.96 per share. Last year they had 0.94. And the last company is going to be Western Digital. They beat the EPS by 12 cents and the revenue by 30 millions, and the revenue year-to-year growth is 38.3%. And we had two reports, one by Billionaire Marks, and it is basically saying they need to basically move into more value companies, since the market can be stable at times. And the other report was JP Morgan. One of the analysts says to buy options to protect against the market drop. And that is actually a good idea if you think that the stock market is going to drop. But these analysts are nowhere to be seen when the stock market continues to go up. Well, that is going to be everything for the video. Please leave in the comment sections below what was your favorite stock mentioned in this video, and you can subscribe to the financial information channel. I'm going to continue bringing videos about the stock market, personal finance, and how to make money online. Have an excellent day and take care, my friends.